Good afternoon. It is the 17th of January and it's just gone 5 PM here in the UK, which is just gone midday New York time. And I'm done for my trading for the day. Green day again, so it's been a decent day, really decent day. And I let the price come to my levels, didn't fabricate anything, just played my levels and it was a perfect trade. There was one little tiny stop where I got straight back in again, which I'll explain in a second. Okay, so let's crack on. On my screen is the 1 hour and I'll just recap the levels for today. So we were watching this channel trending down, and in my live video earlier you may have saw me draw these channels in and I said this is a break of structure here and we've got a potential bounce at 47.60, and I said that was my main watch for today. And the reason I was watching that area is because it was an area of big reaction last time we got there. So we came up, massive reaction up, massive reaction down, so it's an area of demand. And also we've got areas where we kind of tagged the tops, and I think if we go back it's significant as well. Yeah, look at that. So going back at 47, bottoms of candles there, we saw a big move up. Bottoms of candles there, we saw a big move up. Bottoms of candles there, we saw relatively, we saw a move up as well. So it's a significant area, this 47.60, hence why I was watching it as well on my watch for today. So let's go into the 5-minute chart and review the trade. So here we go, this is the 5-minute chart of the ES or the MES index, S&P index futures. So we opened 9:30 and we were about here and we broke down through the trend line, through that channel, and I was watching down here. My order, I had an order set exactly 47.60, and as you can see, I'll zoom in, didn't touch it. I was so close twice, came in, missed it, came in, missed it. But on this attempt, when it came down, I got in on that wick. So I had one order there, and then I added another one on this one back down. I think I added exactly the same area, 47.60 again, and I set my stop to a few ticks below the low, and obviously it was just below that, it was 2 ticks below that wick. That's my stop, and you can see from what happened, it wicked me out there. So a bit annoying, a bit frustrating, but it is what it is. So a little bit of a stop, but I'm still watching this area. The volume was declining. The 2-minute was showing a better decline in volume as well. Let's just get rid of those drawings. Let's just reset the chart. That's better. So the volume on the 2-minute was declining, and there was a slight decline here of 5-minute volume as well on these bigger bars. And I was a bit worried about this bear sandwich or this engulfing candle, the green in the middle, 2 red on the outside. But there was no follow through when it did break down. It came down and the buyers came back, came down, the buyers came back, and it came down again and the buyers came back. So what I did is I went long down here and I added again on my level again, 47.60. So my average price was down here, and then again buyers came in, it came back down, and I added another one down here as well. So I had 3 contracts down here, so that was my average position, around about 47.60, 47.59, 50, that area. And that was it. My stop was always going to be below that pivot, so my stop was going to be below this indecision candle. And one thing I did notice, the green candles, excluding that one, were all, well, basically there were lots of bottom tails going on. And on the 2-minute, I think right on the 2-minute I saw the green candles doing something a bit more interesting. So here you can see the green candles are giving slightly more volume overall than the red candles. And I was watching my order flow as well. So watch it curving around, bottom tails, high volume. This is the one where I got really interested in, hence why I added again down here. And that's it. So declining volume here, declining volume here. I added there because that's an indication to add for me, and boom, off it went. So my first out, going back to the 5-minute chart because I trade on the 5. I use the 2-minute chart for confirmation and just to see what's going on. I also use, hang on, let's just minimize or move this up a bit. I also use level 2, which is this level 2 here, to see where levels are. Combine that with bookmap, which I use here as well, so I can see where there's buyers and sellers. I generally have a quick look on this, give me a visual representation, and then I fine tune the area with this level 2 on here. And I use order flow, these footprint charts as well, so I'm looking for areas of this. Lets me see where the buyers and sellers are within the candle. So you can see here on this candle here, let's get my pen out, on this candle here, the biggest amount of buyers and sellers were sitting here. So basically that's equivalent to the point of control. This I've got up here, the point of control line. I use a volume profile. This is equivalent point of control for every single candle. So I can see it kind of gives me an average area that there's lots of buying and selling at certain points of the candle. And at the time when we was looking to go long, I could see that the buyers were dwindling down here, and the sellers, the aggressive selling was dwindling, but the aggressive buying was picking up, and that's why I added. And that was one of the main reasons I added for the third contract. And that's it. So that's my order flow, and I think you do get. I don't really use it much on NinjaTrader. I use bookmap, but this is equivalent to bookmap. This shows you where historic levels. I'll go back to bookmap as well, because the reason I like bookmap is because I can see on the chart exactly where the historic areas of buyers and sellers are. So rather than just seeing the current level 2, which I've just shown you on my level 2, I can see historic level 2 as well. So it gives me an indication where to get in and out. And the reason I'm explaining this is because it leads me onto my trade. So when I was long at the bottom here, and I was watching an area, which I will bring back down. I was watching for an out, and it was going to be at the VWAP. I was targeting the VWAP, but as I was watching the VWAP, I could see there was about 600 orders sitting just below the VWAP, and it was around about 47.70. It's exactly 47.70, and I made a note of it in our Discord, in our trading room as well. I said, look, lots of sellers sitting there, and I originally moved my my limit order to get out on the VWAP down to just below that area, and so my original stop was on the VWAP. I moved it down to just below that area there, where all the sellers, lots of sellers sitting right above, and you can see what happened. It came in, it missed, didn't get anywhere near the VWAP, and it totally rejected right back down. So that's a mistake. I should have just stuck with my gut. My gut instinct was to take an order there. So I'm going to go through my outs now. My average price was down here. My first exit was on the point of control, and it was the 20 moving average. I got my first out. I had 2 contracts left, and then my next out was here. I did eventually get there, which is fine. I'm happy with that. But I would have been happier had I just taken it there, and it wouldn't have been much I would have lost, because my instinct was right about the sellers above, and it totally rejected. It could have come down and stopped me out, and my stop was down here, so I could have made a loss on this trade. I made a profit on the first leg, on this leg here, and I could have made a loss on the other 2 legs. Had it come down, it would have been a red day. So I'm going to work better on that. I'm probably going to go with my gut instinct more, but it didn't. It came back, and I was getting close to my break even. I think my break even was coming down to about there, and I just stuck with my initial entry. So as soon as it broke the high, I took one off there. So that's 2 contracts of the 3 gone. My third is a runner for the day, and I was originally targeting the 200. Possibly I even mentioned about watching for the pre-market high up at this area, and on my NinjaTrader chart I was looking at that. I wasn't paying attention to this because I was in a runner. My break even was down here as well, so I had to stop at break even. So it's a totally risk-free trade. And then I started trailing the 5-minute pivots, and I trailed it again to there as well. And one thing I didn't notice, and I should have been aware of this, was I had a level set here and I moved it. This level's there for a reason. It's one of my pre-market levels. Didn't trigger the alarm. The alarm's still yellow, so it didn't trigger it, so I didn't draw my attention to it. And had I realised I had a level there, I should have known it because I was staring at this chart, so it just totally blinkered. I probably would have got out because it was making no progress. We had decline in volume as well, and I did think it was resting volume. It looked like it's putting in this wedge pattern at the time, but on hindsight, you know, it's a bear flag with a downward wedge pattern as well. It's putting in as well. So as you can see, my out was then the break of that pivot. What could I have done better? Firstly, I should have trusted my gut instinct more for the outs here. I should have said, no, I see loads of sellers above, and it was an unusually high amount of sellers sitting above, and I should have just stuck with my stop loss there. Like I said, I did move my stop down to there, and as we were coming up, I thought, you know what, it looks strong. I'm going to move my stop back up to the VWAP, and lo and behold, it did exactly what I thought it was going to do. It's tagging. The big sellers were sold off, or the big sellers came in, pulled it right back down, did come back up, and did finally get my target. That's okay, and then I got out again just at the same level later on, so no better off, and I held through this. So generally pleased with how I traded. I'm pleased that I held my trade through this as well and didn't panic on the first red bar, which I normally do. I'm trying to exercise my holding or my panic mode when I see a big red bar, especially when it takes out 2 or 3 candles. And yeah, I'm pleased with the way it went, but I'm just need to refine my exits a bit better because I'm still giving back profit. I gave back profit potentially there. I could have given back profit, and I could have been with my runner then. I could just left it run all day or until we got up here, and I should have been more wary of this level I put in place as well. And this is going to be a reject area, which I talked about, or it was, I can't remember what I said about it in the 47.76. I don't even have it written down on my notes as well. So, but it was there for a reason. It's there for me to draw my attention to it. And then I should have probably handled this out. I should have probably noticed that we were not putting in any more higher moves, and the 2 minute in particular, you can see it's quite obvious that we were going sideways. But I did expect it to break out. It looked like it was going to at one point, especially when I saw decline in volume. But it's fine. I'm happy with it. I said my target was that pivot, or if we closed below the VWAP, and I got out. I'm glad I did because it's still continuing down now. That's it. Decent day's trading. Another green day. A day where I stuck to my levels and let the price come to me again. So levels have worked really well. I think my levels this year, I think generally in their 90% accuracy. I think it just works. You can see from here, this level with a little tiny bit of drawdown worked. This level, if you just keep an eye on it, that worked as well. And there you go. So remember, these are not lines in the sand. It's just a region you can watch. So if you use it as a zone and look for confirmation, so what confirmation could we have taken? Probably when it broke back down below the 200 and below that pivot, add a entry in there, break, retest, back up and down. But that's it. Decent day, and I'm finishing early. One thing to note, actually, my average trades this month have been like 10-15 minutes maximum, maybe 20 minutes. Today I was in this trade a lot longer. I think it started at 9:45 and I exited here at 11:50. So it's my longest trade of the year. In fact, this trade's probably longer than all my trades put together. But still, a good exercise in patience. Okay, thank you for watching. Hopefully you had a good day trading, and I will be back tomorrow in the live pre-market video where I'll go through these levels and we'll look at the levels, see what news we've got going on today, what could move the market, and then I'll come up with some new levels for tomorrow. But again, 100% accuracy today. If you've played these levels, you've done pretty well. Okay, thanks for watching.